The following BLTV program is brought to you by O'Flaherty Law. Please enjoy.
Alright, so I'm gonna go.
Cool. Hey everybody, Bryan McDonald with another Seize Your Business podcast. Today I'm here with Greg Kojak of Lincoln Park Financial Group, and what we're going to be talking about is a strategy that business owners can use to attract and retain employees in the current marketplace that we're in, and also use the same exact strategy to accelerate savings for retirement. So Greg, thanks for coming out.
Sure.
Appreciate it, man.
Yes.
So why don't you give a little bit of background of who you are and your experience and what you do?
Sure. So our firm was founded in 2003. We actually have a lot of clients that are interested in tax strategies and kind of roll that into full financial planning.
Oh, okay.
So that's kind of our typical client. So we add value by creating strategies and niches for them to build and develop and adapt to whatever their particular circumstances.
Cool. So it sounds like what we're about to talk about is not only a tax saving strategy, it also helps save for retirement, and it also helps in the current marketplace with low unemployment attract and retain employees, because everybody's worried about keeping their employees. Did I get that right?
Yeah, absolutely. So nowadays with really low unemployment, everybody's fighting. You know, they're trying to get talented people, and then when they do get talented people, they're doing everything they can to keep them there, because other people are trying to pull them away. So
tell me a little bit about the strategy. Is it called something specific, or what do we need to know?
yeah, so it's kind of like an offshoot of the 401k. So the 401k is, you know, your typical standard retirement plan. This is called a cash balance defined benefit plan.
Okay.
It's essentially a pension. And so pensions are a little bit different, but they're rolled into the 401k, like they run side by side.
Okay.
Yeah. And what the defined benefit plan provides is a paycheck for all your people during their retirement.
Oh.
So kind of like Social Security.
Oh, got it.
And so, but the plan allows for much larger contributions to go into the plan. So it's another an additional tax deduction for the business owner, and also if there's a lot of profits and reoccurring profits, those can be kind of moved into the to the owner.
So is this in conjunction with a 401k? That is, you can have both of those present, or
they're usually done in conjunction with each other. I think I've only seen one as a standalone.
Got it.
So yeah.
Okay. So this isn't in replace of. This is in
addition to.
In addition to. Yeah. Thank you. So you said that there's ways to push cash into this, and it sounds kind of complicated. So what should a business owner be thinking about when they're either thinking about doing this or setting something up like this?
Sure. So the biggest thing that you need to be cognizant of is that these have to get funded each and every year.
Okay.
And so these are larger contributions. So you want stable cash flows that are reoccurring.
Okay.
because you have to be able to provide and contribute to all these people, because it's essentially you're funding a future payment for all these for your employees once they retire. So if your business is a little more volatile with cash flow, you may want to think twice about it and kind of review it, because all of a sudden you could be, you're up for a contribution and there's no cash, or the cash has already been allotted somewhere else. So that would be the biggest thing to look out for. But also these pensions also allow for a margin. And so here's the low end of your contribution, here's the high end.
Oh, God, I was going to ask this. Yeah. So you have to come in between this, not just a set amount.
Exactly. And each year it's tested, and there's an analysis that's done by an actuary.
Okay.
And there's a Form 5500. These plans are not inexpensive, but you just have to look at the numbers and see how much you're getting in return. Because you want to justify those expenses.
And when you say tested, what do you mean by that? Meaning the top and bottom, or the low and the high of contribution is adjusted every single year?
It is, yes, and it's based off of a formula that has to be sent to the IRS. So so when we test the plans, it's making sure that they're funded appropriately.
Got it. Now, are you replacing an accountant in this situation, or standing aside the accountant and making sure everything's done right?
We are standing next to him, yeah.
Yeah, okay. All right, because sometimes we're talking about IRS, people may think that you're standing in place of them. So,
right, no.
So what else do they have to think about in regards to these plans?
I guess, the biggest reason why we're getting a lot of attention and traction with this is because the business owner is looking, again, for retention tools.
Okay.
So few businesses are offering pensions that if yours does, it's a marketing tool. It's also a retention tool. So you can go to your people and say, hey, we're rewarding you for your hard work. And if you're trying to attract new people to your company, that's a great perk, right? I'm giving you a paycheck for life. You just have to work for me. Yeah.
So how does a business owner manage paying a ton of money to the employees? Because I know they're probably listening to this thinking, hey, this may I'm already giving maybe 401k match. How do I be grateful and give them money but not give them the house?
Absolutely. So we run efficiency ratio analysis that shows of the contributions that are going into the plan, what percentage go to the owner.
Okay.
And so typically we are striving for like 75% or more of all the contributions to go to the owner or owners.
Okay.
You can also segregate like a highly compensated, vice president or chief executives.
Leadership.
Right.
Yeah. Oh, okay.
So you can build these, and there's some flex in there. It just really depends on what the business owner is trying to accomplish, because we can custom make it for each one.
So what are the general things they're trying to accomplish? Is it, tax saving as well as saving extra for their retirement and retention? Is there other things?
Those are probably the biggest ones. Just to have this perk and benefit, and knowing that the profits of the company are going into the plan. It is a tax deduction, so the business owner really likes that. And then if they are a little bit behind on saving for their own retirement, getting a big portion and putting it into the plan is a really big help.
So is this really sharing in the profit of the company per se?
Essentially it is.
Okay.
So lots of times they are, the business owner will connect with us or through their accountant and say, what are our strategies? We're seeing a lot of good profit year after year, and we're getting crushed by taxes.
Yeah.
What can you do? So
how can I pay myself and not Uncle Sam?
Right. So we'll run the analysis and then show them, if you do put in this amount, how does it look on paper? What does your income get cut down to? So they're very popular. And also these plans are designed, we have like just a single person company.
Okay.
Real estate developers or doctors that are independent.
Oh, really?
We also have 100-person plans. So it can be built and it works really, really well for a single person as well, because again, the pension, if you set it up, you have to give it to all of your employees Well, if you're your own employee, guess what? You get all the money.
You get all the money.
Right.
Yeah, okay. So that sounds great, right? I mean, that's definitely attractive, I'm sure, too. A lot of people like the doctors and the real estate developers, things
Absolutely.
like that. So any dangers that people have to think about? Or maybe I ask a different way, have you ever helped take over a plan that was blowing up and help somebody fix it that you can, or dangers you can share with people that, or misinformation about these things that's out there?
We've seen a couple of plans where the business owner just kind of had a bad year, right?
Mhm.
And you can't always be profitable. So that's why we're given the flex room. So this is your minimum, this is your maximum. And based on funding, sometimes you can freeze the plan.
Okay.
So there's room to say, I think our actuaries will say that you get one bad year.
Okay.
If you have two in a row, usually what we'll do is just terminate it. We haven't actually terminated anything yet, but we've had instances where we have to decrease or figure out how to accommodate.
Accommodate, yeah. And if you terminate the plan, do you have to roll back the funding, or that's just as long as you build the plan? Like
It's as is, so you can stop it, but then it just kind of it's contained inside of this pension fund.
yeah.
And then eventually it will get distributed out, to your employees.
So is it kind of like, making it kind of real simple, it's like stopping contributions to your 401k and never contributing to it again until you hit retirement?
Right. Typically, what would happen is like there's a final. You file with the IRS to terminate the plan,
Okay.
and then essentially we've never done this before, but you would have to distribute out. So everyone would take their portion
Okay.
of the pension and like move it into an IRA,
Got it.
like a direct rollover type.
Oh, okay. All right. You move it into a different plan that can keep moving forward. Per se, right? I mean, I'm going to loose with the language here, right?
Yeah. Yeah. It's and again, we haven't really seen it. So when we talk to the business owner, we really stress that cash has to be frequently.
Yeah.
Ample cash, reoccurring cash flows. Those are really important. So if there's ever a time where the business owner is just not sure, or we will ask about the last 5 years, for instance.
Oh, really?
Yeah. And if they say, oh, I had 2 or 3 bad years, I didn't make any profit, it probably doesn't make sense to have this plan in place
Got it.
and cause financial stress on the owner.
So you have to come to the table. For this to work for you, you have to come to the table with 4 or 5 years of profit in a row.
We would recommend that, yeah.
Yeah, right?
Thanks so much for watching our video. If you have any questions, feel free to comment below. Click the subscribe button for new videos every week, and download and review us on iTunes. Visit learn-about-law.com for other legal-related articles and videos. Visit our business podcast and video blog, seizeyourbusiness.com, and visit Making Real Estate Fun for real estate videos and podcasts. Call us at 630-324-6666 for a free consultation.